When it comes to being a successful trader, you really have to learn to accept losses, and especially you have to make sure that you can accept the occasional big loss. This is a problem that many newer traders have, especially novice traders. You first start trading, you never imagine that you're going to take any kind of huge loss. You know you're going to take some losses. Mentally, you're kind of prepared for that, so you start trading small, you're risking a few $100s to make a few $100s. Maybe you occasionally do some naked options. Sell some puts, sell some strangles, whatever it happens to be. And you think, you know what, the worst case scenario, I lose a few $100s, maybe a couple of $1,000s. And then all of a sudden the outlier event happens. There's this crazy move. All of a sudden you're staring at a loss of $5,000, $7,000, $10,000 on a position that you never in your wildest dreams imagined that you could lose so much money on that position. You never even considered it, and now you're confused. You don't know what to do. And kind of counterintuitive to what most people think, a lot of times the right move is to just accept the loss. Take the loss, right? The thing happened, the event happened, it went way against you, you got run over. Accept the fact that that happened, close the position for that massive loss, and move on with your trading life. I know that's really hard, especially for newer traders. Now, once you've been trading for a while, once you've taken a few big losses, and I've taken some pretty bad beats on occasion, and it's gotten to the point where now anytime one of these things happen, I realize, this will happen every few months, every couple years. You're going to have some weird event that's going to come along and just slap you across the face, right? And it's not the end of the world. These things are actually supposed to happen. Believe it or not, losses are part of the plan, because when you have a trading plan, say you sell puts every week in SPY, imagine that's your core strategy, that's your plan. Are you going to win on all of your puts? Well, no. There's no way you're ever going to win 100% of your time on a short put in SPY. Let's imagine you're selling 15 delta puts. You expect to win about 85% of the time. About 15% of the time, obviously, you're going to lose on your puts. Most of the time, though, of that 15% of losses, it's going to be small losses. It's going to be manageable losses that you kind of expected. But I would say like 1% of those losses are going to be something quite special. If I switch over to my trading platform, which of course is TASTYTRADE, this is the last 3 years of SPY. Let's go back a little bit and let's see if I can find any kind of crazy drawdowns. Obviously, the bear market year of 2022, we had some really nasty periods where the market made some kind of violent moves, especially downward. If I switch to a 5-year chart, that way I can go all the way back to COVID, and let me scroll all the way back to 2020 here. And of course, this was the COVID crash, right? In the February into March of 2020, this was nasty. You can see SPY was trading around 340. It got all the way down to about 218. So you're talking about like a 30 to 35% drop in the SPY. So you can imagine if you were trading short puts in SPY at this time, you got absolutely killed. Now, this is kind of a once every decade kind of event. You don't see sell-offs, this kind of major kind of crash does not happen that often. You're talking 2020 with COVID. You're talking the great financial crisis of, 2007, 2008, all the banking crisis back then. You're talking the dot-com burst, in 2000, 2001. And then, of course, you got to go to the 87 crash back in the 1980s. So you're talking about, about every decade you can expect something this drastic to happen. And then you can expect some not quite as drastic, but still pretty serious events like a 10%, 15% drop. You might expect that every handful of years. So occasionally you are going to be faced with a pretty significant loss that, again, a lot of newer traders don't expect these things because you never experienced something like this. If you just started trading in the last 6 months, you have to have something like this happen at least once before you realize, oh yes, this is an actual possibility. It's not just a possibility, it's actually an inevitability. But again, these kinds of losses, they're not necessarily a bad thing. They're supposed to happen. I know that's kind of crazy to say because a lot of people imagine trading is all about winning and that somehow you can control the outcome of your trades, that you can make sure you always win. But let me do 5 years in SPY. Let me do a short put. I'm going to do a quick back test. Let's sell. I'm going to do 15 delta put at 60 DTE. I'm going to do it on a specific day of the week. Sure, we'll enter these every Monday. We'll limit the number of active trades to 5. I'll exit at 21 DTE. So we'll put these 15 delta short puts on at 60 DTE, take them off at 21 DTE, standard kind of tasty trade rules. We'll also take profit at 50% of the premium received. Now let's run this back test. And the back test is going to take a few seconds here. It's got a lot of trades to take. It's going to probably be a couple of hundred different short put trades that it's calculating here over the last 5 years. And this is a very profitable strategy. We already know short puts in SPY work over time. You would have done very nicely doing nothing but selling puts in SPY had you manage your risk correctly. And that's the secret here. Don't blow up your account, right? Because you have to plan for events like the COVID crash here. You have to plan for events like the August 5th volatility spike that was very nasty to short options right here in August of 2024. But if I go to the details here, you can see we had 221 trades. We profited on 208. So only 13 trades were bad trades. And you can see most of the losses, you know, are not terrible losses, a few $100s. This one here is about $1,000. Nothing crazy. This one is getting a little big here. So this is one loss. That's $2,200. That probably hurt you a little bit, but you could live with it. And the COVID losses are pretty massive. $5,000 and $3,500 here. So you lost about 10 grand on these two puts that were put on during the COVID crash. And these are actually much more massive losses than you think, because 5 years ago, a $10,000 loss on SPY, I mean, SPY was only trading around 300 bucks, you know, before it crashed, you know, 30% or whatever. So that's a huge loss. But again, overall, you still won on your other 208 trades of 221. You came out massively ahead in the long run, despite those occasional huge losses. So you just have to accept the fact you're going to make money. If you trade in a responsible way and don't take too much risk, never take so much risk that one of those outlier events takes you completely out of the game. But if you trade small and trade responsibly, you're going to make money in the end. And when you realize this, you stop worrying about these crazy losses. The occasional bad loss is supposed to happen. You just take the L. You take the L and you move on and you keep trading. I actually remember a few big losses, kind of outlier events that I didn't expect to happen that really tested me here in the last few years. Now, I've had a few of these happen, so it's gotten a lot easier over the years, but I remember Upstart a couple of years ago. Let me go to the charts here, and let's do we're on the 5-year chart. If I go back, I want to say it was about 2 years ago. Yeah, Upstart had this kind of move here where it went from like $14 to about $72. And I forget what I got run over. I don't remember if I got run over on short puts or short calls, possibly both. But this period of time here where over a couple of months it basically, you know, 5x'd its share price, right? This was crazy. If you had short calls on, you got absolutely murdered. And then what is even worse was the crash afterwards. In like 3-4 trading sessions, it went from, you know, $70 down to about $32, right? So it lost more than half its value in like 5 trading sessions. I can't remember exactly what I had on. I just remembered I never traded Upstart again because I took a loss of several $1,000s on a short options trade. It might have been a short put. It might have been a short strangle. Those are common trades that I do a lot, short puts and short strangles. I remember another one that I had, I think a strangle on, was Wayfair. I want to say I got killed on the call side of this. So a stock exploding in price, and I believe it might have been, yeah, I think I found the period. I think it was late 2022 or early 2023. This period here where you got this huge spike up and then followed by a huge spike down. I believe I got double whammied here. I want to say I got killed on the call side on a strangle. And then I sold some puts, and then I got killed on just some naked short puts on the way down. This one was another one that cost me several thousand. I want to say $4,000 or $5,000, and I wasn't trading like multiple contracts. I want to say I was trading one strangle or one put. Now it was multiple trades through this, but I wasn't doing anything crazy irresponsible here. But again, sometimes weird things just happen. A perfect example this year in ARM, I had a trade where I lost I want to say I lost about $8,000, maybe $8,500. It was a huge loss because ARM back in February made this move where it went from like $76 to like 4 trading sessions later, it got all the way up to a high of 164. Now think about that, 76 to 164. I had a strangle on, and I want to say this one, I did have multiple contracts. I want to say I had 2, maybe 3 contracts, and my calls are typically going to be, at least 30 deltas out of the money, right? But, still, this explosion in price was probably at least $50 above where my call was trading. That's $5,000 of intrinsic value at that point on a strangle. If I had 2 of them on, that's like 10 grand of intrinsic value that call is now, really in trouble. And what I ended up doing is I took the loss, right? I took like an $8,500 loss, I think, when I closed the position. I kind of was forced to take the loss. I wasn't necessarily forced to, but I was really close to, I was like 90% of my buying power. My buying power exploded on these naked strangles because this kind of move is such a weird move. This was not an earnings event either, which was what really made this move really strange. When I say sometimes these outlier events, these unforeseen events happen, this was the perfect example because it did have earnings, I want to say 2 candles before all of this happened. So it wasn't the earnings event that made this thing move. It was like 2 or 3 days after earnings. Then we start getting these 3 candles here, which were just absolutely insane. There's no way anyone could have predicted that move. There's nothing I could have done about it, but the thing happened. Sometimes the thing just happens and you just have to take the L and move on. And the reason I bring up some of these past trades that I remember cost me a lot of money, that Wayfair trade, was like 2-3 years back. That Upstart trade was a couple years back. This ARM trade was really just a few months ago, right? Earlier this year, in February of this year. And I remember when I took that loss in ARM, I wasn't bothered by it. It was a lot of money, right? It was a lot of money on a trade that really, most of the time I'm thinking I'm going to profit a few $100s or I'm going to lose a few $100s. I ended up losing like $8,500 on that trade. And I remember at the time, it was no big deal. I've done this before because I did it with that Upstart trade. I did it with that Wayfair trade from a few years back. I remember Meta cost me a couple grand one time, like 5 years ago. Like I remember some of these trades where these have happened before and I was just fine. Overall, I finished the year ahead, up money. Like these were good years. 2023 was a fantastic year for me, despite whatever I did in Wayfair and Upstart. 2024 is looking like it's going to be a great year, despite that horrible start to the year with this ARM trade. It's like these things are not the end of the world. I remember when I first started trading, I never wanted to take a loss. I refused to take a loss. Maybe a small loss was okay, but if it was a big loss, I always held on. I held on and tried to fight it. And sometimes all I did was just hold and hope, right? Just hold and hope that it works out in the end. Most of the time, what happened? It didn't work out in the end. In fact, the loss became bigger and bigger. Sometimes I lost a ton of money holding on to positions. I should have just accepted the loss in the beginning. When the trade first goes against you, like this ARM trade, from earlier this year, would I have been all right holding on to this trade? No, it would have never come back anywhere close to where I was originally in the position at, unless I held it for at least a couple of months. And even then, I don't know if I necessarily would have recovered enough money over that couple of months for it to have been mentally worth it for me to be in that position. And when I say mentally worth it, you guys, if you're holding on to these unrealized losses, it's actually mentally refreshing. Like it actually is relief sometimes to just take the loss, because when you take the loss, it's like, okay, I took the loss. It's over now. I can move on with my trading life, right? I don't have to. If you're holding on to that loss, you're thinking about that loss constantly. You're thinking about it each and every day. You're thinking about it in the middle of the night. You're thinking, man, I hope that thing, that ARM call that keeps going against me, I hope ARM doesn't keep going up in price. It really worries you. It stresses you out. Sometimes it can stress you out to the point where it can actually be a negative for your health. So again, losses, they're supposed to happen, and the occasional big loss is also supposed to happen. So, don't get upset. Accept that this was always going to happen. It's part of the plan. Just know if you're doing the responsible things in the long run, you should come out ahead if you manage your risk properly. Part of managing your risk properly is actually taking the losses that you're supposed to take. Don't try to fight a loss that is in some cases hopeless, because that's where people get into trouble. That's where people, they see a loss of 5 or 10% of their net lick account value and they refuse to take it. I got to hold on because I can't take that kind of loss. And then the next thing you know, they're losing 20% or 30% of their net lick account value. And that's very hard to recover from. Most of the time when you refuse to take that big loss and you hold and hope, well, that big loss turns into a monster loss. And sometimes those monster losses turn into the mother of all losses, meaning that's the loss that's actually going to blow up your account and put you out of the game. In the end, as long as you're trading responsibly, you're keeping your position sizes small. Each position size should be a small position, never get too big on any one position. Also, make sure you keep your total buying power usage under 50%. If you do that, most of the time you'll survive and recover from any of these crazy losses that, again, you can kind of expect, to have one of these kinds of events every year or two. Now, if you want to learn more about options trading and specifically my favorite option strategy, the wheel strategy, check out my book, The Super Wheel Option Strategy, available on Amazon. You'll find a link to this book in the show description. Also, if you want to help support my work, consider subscribing to the DT Options Discord server. I hold a live voice chat there every day. We do a 1-hour trading session in the mornings each and every trading day, and I'd love to have you over there. Peace, guys.